Good afternoon, everyone. So it's been a good week. Everything that we looked at on Monday. The first thing we looked at on Monday was looking at how to get that reversal. So we took an example of the Euro USD, and we saw that point of reversal, and it has actually reversed. We're going to look at the chart a few moments from now. So that reversal actually took place, and just following those indicators, you can easily get, you can see where where a trend can end and where a new trend can begin, and there you can, you can avoid losing a lot of money, just by knowing that a reversal is about to happen. When you get those indicators, you get those indicators that show you that the reversal is about to happen. You start taking note of them, and it can maybe take a few days, maybe 3 days, maybe 5 days, a whole week. But that's good time for you to start planning your exit. You start planning to exit the trade, and you start looking forward for the reversal. And in that time, the market can be a range market. It may not just go up and come down and just start reversing immediately. You can enter a range market, and it could take some time to actually pan out. But when it does, then it's better to be patient and wait for the new trend to begin, and you start trading instead of staying in and making those losses. And then yesterday we looked at that Ichimoku indicator on the Japanese yen charts. So you can look at that and you see how it happens. So there was that, I think it's called a Chiku span. If you just open your Ichimoku indicator, there is that green line. Now, one thing I forgot to mention yesterday is that that green line, it just mimics the price. The price, you normally have those candlesticks, but if you turn that graph, that chart, into a line chart, there is the candlesticks with the body, then there's the candlesticks without the body, then there is the other type of graph which is just a line graph. If you turn it into that line graph, then it's going to show you the price. It's going to show you the exact mirror, not even a mirror image, but a replica is in the Ichimoku. That green line is just a replica of the price movement in a line graph. Another way of getting that line graph is by getting your simple moving average and giving it a period of 1. When you do that, you will get the line graph. I'm going to show you that as well if it's not very clear. But so that shows you how the Ichimoku is working. So it's a very clever indicator when you think about it. It's a very clever indicator. It shows you the price movement, the current price movement, and it shows you that same price movement 26 candlesticks back. And then it shows you how it's changing. It shows you how it's changing. If the current price movement is now moving below the previous price movement, it starts giving you an indication that you're about to have a reversal, or things are about to turn around. And that is quite, that is something very, very interesting that is something we should actually look out for. And you just start practicing your trades with that indicator, not straight away. You can start the practice straight away, but don't just apply it to your trading strategy right now, because you can make so many mistakes. So just look at the Ichimoku, load it into your charts, especially the Japanese charts. Let's start with the charts that are actually prescribed to be used with the Ichimoku before you apply it on Euro USD. So apply it on those Japanese charts and see how it is, how things are happening, and then you can become comfortable with it, and then you start loading your other charts with it, and you end up developing a trading strategy with it. So for the Ichimoku, if you load any other indicators into the chart, it can be very confusing, but if you can look through all the confusion, then well and good, go ahead and do that. But if it becomes too confusing, then don't push it. Don't push it. Things can get very bad if you keep on pushing it like that. Then another thing about the Ichimoku, use it with oscillators to help you identify trends. To identify trends and reversals. I haven't seen a scalping strategy using the Ichimoku. It's quite, it's quite something. but maybe not for scalping. Maybe you can get some short trades on smaller time frames using that same kind of analysis. But one thing I've discovered about it is that it normally gives you very strong trends, very, very strong trends. So if you're going to be using it, then you might not get those strong trends in smaller time frames. It might be a bit tricky because a smaller time frame might give you a bearish trend, when in actual sense, in the bigger time frame, it's very bullish, and just like that, you'll have a short-lived trend or no trend at all. It could be a fake, and that can make you lose some money. So just to avoid all that stuff, first look at it the way it is prescribed to be used. Then you can add your modifications and add your other oscillators, and maybe develop your own strategy, but also test it throughout a long period of time, so that you know how many times it actually works. So that you know the frequency of its success. So let's just take a look at the Euro USD chart, and we'll look at that pattern that we looked at on Monday and see how it has played out today. So if you look at the chart, looking at that day on Monday, it was it was a point of reversal. It was a point of reversal, and so we looked at it before it actually reversed. So this is Monday. This is 6th of September. 6th of September, and that was 2 p.m. So this is when the program was on, trading on Monday. So the moving averages were still short term above the long term. So there we didn't have confirmation. We didn't have confirmation with that on Monday. So the moving averages were still bullish, but then this parabolic was above price. So that was an indicator. That was an indicator of the price. For the parabolic sign, it was above the price, and that was an indicator of the reversal. Then we had we had these falling tops of the RSI, and here they were rising. That was another indicator for a reversal. And also the MACD had moved below. So there, there it started. That's why we looked at the reversal from it. So this is a 1 hour time frame, by the way. It's a 1 hour chart. So okay. So what happened yesterday, the 7th? The market became somehow a range market. It was moving sideways, and there wasn't really any way to start selling. You could have started selling immediately. If you had started selling maybe at this point when the average is crossed, I think that was the last indicator that we're actually waiting for. The average is crossing, so now we have the long term above the short term. So when they crossed yesterday, that was like an indicator that you can now start selling. That the reversal, we have so many confirmations from all these indicators. Then at that same time, we had this ADX pointing. It started the power line moved above 25 together with a plus D line. They both went above 25, and that gave us that small bullish move. But then afterwards, it started falling. It started falling seriously, and right now it is very bearish. So that was a perfect point for a reversal. And with this one, the good thing is that we caught it in real time before it actually happened. Then it happened yesterday, and then today we have some kind of confirmation for that reversal. So if I apply this the Fibonacci, so this is where we looked at the reversal for this bullish, where this trend began, and now we've caught that other reversal where this other trend also has begun, this current trend that we're in. So after getting that reversal, and you draw the Fibonacci's there, Fibonacci retracement levels, that's a good point at the back there. and here just touching the body of the candlesticks, we have the other point. Yeah, so where the Fibonacci retracements are. Yeah, so after getting the reversal, then you look forward to the 23.6, which is obviously, it's the most obvious level to get. Yeah, so there we have the 23.6, and you can see how price was supported there, and it broke that price earlier on today. You can see this parabolics are appearing above, just to give you a confirmation that this thing is actually selling. And you can see this ADX here, the negative, the minus D line, it's above the plus D, and then the power is also above 25. The MACD is, it's very, very well below the zero line. So it is, it is very bearish, and now price has sort of just been resisted at the 38.2. It almost tapped there. Maybe it will tap there later on today. Yeah, so basically, that's where the Euro USD is. So areas, take profit areas if you're already in a trend. There's that robot which I somehow showcased on Telegram, and that robot shows the trend. You have to choose the trend, you analyze and get the trend, then you activate the robot so that it starts selling, or it starts buying, depending on which trend you have, which trend you've identified. So yeah, after identifying the bearish trend, the obvious thing to do was to put that robot to start selling. To just keep on selling at whatever point. So areas to stop out at this 38.2, 50.0. Okay, that is the safest area. Then the 61.8 is the most, the what I normally use is, it's skipping my mind. Yeah, but if you have too much hope, you can go for that 61.8. If you're feeling very hopeful and you're feeling very energetic, you can go for that, and you see how far it goes. But the trend might not end there. It could go a little bit further, but which for now, this is what we have, and we can continue selling up to this 50.0. We can have that confidence of selling up to there. So 38.2 previous levels that have a point of significance. Maybe this level here where it was, this was the 31st of August and the 1st of September. Yeah, so that is one area there where price was, it was resisted and somehow supported at the same time, and price broke through that level. So it makes it very significant. This 50.0 is very significant because of this area here. The date is 30th of August. Yeah, so price was successfully supported there, and this 61.8, the support level where price was supported. Now that was on the 20th of August. That one there it took some time. It's very significant. So price could easily get to those levels, and yeah. So if you're selling, okay, the obvious thing to do is sell. Euro USD right now. Buying could be, you need to have some very strong analysis in order to buy in such a trend. Yeah, so that thing I was telling you about the Ichimoku. Yeah, the Ichimoku. So price movement in the Ichimoku is it is mirrored in this line. That green line, it's called the Chiku span. Yeah, the Chiku span, it mimics price movement and takes it back about there are about 26 periods. So one way to actually to get this actual line, how it looks like, and you see how it is being mimicked. You just turn your chart from this candlestick chart into the line chart. Yeah, so when you look at this line chart, it looks exactly like the Chiku span, and it dates back about. Let me get the proper. Yeah, there are 26 candlesticks in the back. That's where it is being, it's being mirrored there. Yeah, so this is very important because this line is always at the back. If you look at this, the USD JPY chart, this is the current price. Where price is right now, that is the current price, and this where this yellow line is. Let me turn it back into candlesticks. So you can see this is where price is. And price is moving in real time. It's moving with the Tenkan Sen and the Kijun Sen. Yeah, so price is moving with those two lines, the red and blue line, the Tenkan Sen and the Kijun Sen. Yeah, I've just said that again because these are very cool names. Yeah, if you're naming your kids, maybe you can look for these names. Yeah, Tenkan Sen, Kijun Sen, and you tell them I named you after Forex. Yeah, so these two lines, they move with the price in real time. But the cloud moves ahead of price, and it moves. They are also these are like a 20. There are 26 periods in front. That's where you have the cloud, and then periods behind is where you have this one here, this Chiku span. Yeah, so that is something very interesting, and. Yeah, so I received many phone calls, people telling me, man, that Ichimoku, we didn't understand anything. But anyway, I'll do another episode about this, and we shall look at how it actually, this one is a very good indicator to show you those price movements and how you can look for a reversal. Let me load this Ichimoku into the Euro USD, and we see how it could have helped us to pin out that reversal better. Yeah, so let me just load it there, and it's normally for Japanese charts, but you can apply it on these other charts here, and maybe just maybe you can have a better trading experience. Okay, so this is the point of reversal. You can see price moving below. You can see price moving below this cloud. Now, so using these principles that we've just talked about right now, so price is now moving upwards, and the RSI started giving us a signal from around this point when price had just hit the overbought position. Then all these lines, all these tops here are going to the top. They are actually moving downwards on the RSI, and yeah, so looking at this point here where let's say this cloud here started forming at this point, let's say there, the bearish cloud started forming. So going back 26 periods, it is around, it is inside there. Now the first signal to start selling is somewhere there, and if you take it back 26 periods, it was down there. So you can see this band starting to cross below the price, and remember the RSI was already there giving us that other signal. And yeah, so as price goes on, you see this Chiku span starting to move below the price, and as that progresses together with a MACD, together with RSI, together with parabolic SAR, and all those other indicators we had loaded, all these ones, let me add the Ichimoku there so that it becomes as confusing as possible. Yeah, so we have the Ichimoku there right now. We have there are so many things in there, but clearly price is below the cloud, and this Chiku span is very far below the price. So, areas for reversing, we haven't yet got those areas, but the RSI has dipped down into the oversold position. So, this trend here is, it looks short-lived at the moment. So, the RS, this is the first indication that price could start reversing in the future. Yeah, so hitting this oversold position is one indicator that should start holding our breaks. So another thing we should wait for are areas that are lower than this 38.2 where price is right now. So when price starts digging below this period here, and then we start having the RSI to starts climbing above, then we start getting clear signals to exit this bearish trend and start looking forward for a bullish trend. Yeah, so here there is a very big combination of there's a big combination of indicators. There's a parabolic SAR inside there. We have the moving averages. We have the Ichimoku, then the oscillators. Yeah, oscillators are the ones which are below the price. So, sorry, below the chart. So, inside the chart, you basically have, okay, indicators. And those are the price. If you look into these are trend indicators which are within the price. Then below the price, there are oscillators. Then there are volumes down there and other indicators. So here, the oscillators we are using are these ones here. The MACD, the ADX, and the RSI. So those are going to help us to keep track of this trend. Yeah, so scalping with all these indicators can be a bit risky. Maybe if you're going to take on a few trends in the smaller time frames. Maybe in the 5-minute chart, in the 1-minute chart, and you want to scalp there, you catch a small trend, and then but those ones, they rapidly move. They rapidly move. Even the Ichimoku can easily be turned upside down. Price can be bearish above the cloud, it can be bullish below the cloud, and that can be very bad if you want to follow this for that purpose of scalping. Yet it was intended for another type of analysis. Just keep it in mind that most of these indicators were made a very long time ago. Trading started in the 1600s. Yeah, that's a very, very long time ago, before any sort of any kind of modernization came this side. So these guys are already trading, and they started making all those trading methods, and they were drawing on graph papers and trying to plot out how these things are happening. So imagine the Japanese drawing this Ichimoku on a paper to try and plot out where price could be headed in the future. So that is something it's something quite interesting if you think about it. So all these methods were used those days with that traditional risk of 0.01 on $1,000, which is the equivalent of that risk today. The normal risk was one lot there are no micro lots. So it was just one lot on the account of $100,000. That is why trading, any type of trading, was basically reserved for people who were super rich. If you are not rich, you couldn't trade. You couldn't afford to trade. So you just leave it because you had to start with $100,000. And by any measure, $100,000 is quite a lot of money. And anyone who acquires that kind of money, you can't risk it in trading. It becomes you fear to join that club of traders. So you need someone who has so much more, who can get $100,000 and start trading with it. So that is where that is what put the difference between traders and non-traders. It was just a matter of money. But right now, where you can even start trading with even $2, $5, it has become very commercially available for anyone. And you can risk whatever you want these days. There are no limits to anything. There's no limit on money, no limit on risk. So you can do whatever you want. So there are no rules. The rules are there, but you can easily ignore them because the rules, the repercussions are not so big. You're losing $20, you're losing $50. The repercussions are not so big. It's not like losing $100,000. That one, it's a pinch in anyone's pocket. But right now, $50, $100, you can lose that money and you won't feel the pinch. But because the rules don't really apply, you can do whatever you want. So when you trade using those old trading methods, keep in mind the risk ratio for those trading methods. They are very low risk methods, and they are very cool methods that require a cool head and a cool risk. But these new methods that we're using these days, all these indicators, we combine them. Some people just trade because they feel like that's where the market is headed. There are three types of analysis. There's a fundamental analysis, which you do using the news and all the events happening in the world. That is fundamental. Then there is technical, which we've just been doing. You draw these lines on the chart, then you put these indicators. So you're technically analyzing. Then the third one, which no one ever talks about, is sentimental analysis, whereby it's based on your feelings. What you feel is what you do. If you love gold, if you love the GBP, then you trade those charts because you love them, and so how you feel when you wake up is how you're going to act. Yeah, and that is your analysis. Today I woke up feeling nice, so I feel like I should sell the GBP USD, because that's what I feel I should do. That is sentimental. Yeah, so that is a third type of analysis. When it works, you normally call everyone and tell them how you're making money. When it fails, you keep quiet, and no one will ever know, and no one will ever reflect on the mistake and avoid that same making that same error. So with sentimental, it's very hard to share your results with people, but with technical analysis and fundamental, it's very easy to share your results with people and what you're going to do. And if they don't agree with you, then they can share with you what they have analyzed, and just like that, you can end up avoiding making a very big mistake. And that's what's very vital on the Telegram group. People share their analysis, and if you don't agree with them, you tell them your counter analysis, and then you come to an agreement and you see what to do. Yeah, so it's going to start happening on the Telegram group. If you're not part of that group, you can just search for Trading Dawn and join that group, or you can search for BVB Trade FX and you join that group. And then there are so many people posting analysis. If it works for you, always compliment the person who has posted it. Just give them a thumbs up or thank them because they've given you some free money. Yeah? And just keep on complimenting them. If you don't agree with their analysis, then post your analysis. Don't just tell them that that doesn't work. Yeah, post the counter analysis and tell them that you said that we should sell the Euro USD, but according to my analysis, I think we should buy the Euro USD because of point A, point B, point C, and then we all compare that and we take on that analysis. And then in the future, when we are reflecting on that, on how to trade, we shall avoid making the mistake that was given before. So just like that, we keep on improving in how we are trading, and we grow. Our accounts grow, and our trading strategies also grow at the same time. Yeah. So I think that's it for today. Thank you for watching. Have a good day. Goodbye.
Smart 24, driving business.